Welcome back. The Nifty Bank has now extended its loss to about 1%. Remember, it's the weekly options expiry, and the options action does indicate that 24,000 would have been a strong resistance for the Nifty Bank, and Nifty Bank is currently at the low point of trade, and that's dragging the Nifty as well, which at the start of the show was absolutely at the flat line and currently is sitting with a cut of almost 20 odd points. But what's doing well is the mid-cap space, and in there the unlocked stocks are doing rather well. So let's get in some trading ideas ahead of the weekly options expiry. Jay Thakkar of Marwari Shares and Financials joins us now. Jay, what would your prognosis on the indices and individual stocks be?
Hi, very good afternoon to you. Well, as far as Nifty is concerned, yes, definitely, there has been this range of 11,400 to 11,600 today being a weekly expiry. I would say that, Nifty surpassing 11,600 levels going forward is really seems to be difficult. But on the flip side, I would say that 11,400 is a very crucial support as well. So we might see Nifty somewhere closing around, between these levels, somewhere around 11,500 to 11,550 within this range. I absolutely agree with you that the Nifty Bank is really facing that resistance around 22,000 levels. So unless we don't see that surpassing and those levels getting taken off, I would say that Bank Nifty would keep on adding the pressure on Nifty. But then there are some few pockets I would say which I'm bullish on, and I think those can really help Nifty to climb higher. And one of them is TCS from the IT pack. In fact, the IT pack is really doing good, and I think since a couple of weeks we have been seeing IT in fact consolidating within a narrow band. Now it's time for Nifty IT to in fact move higher, and stocks like TCS, Infosys, Wipro, all of them, the large cap IT names are looking in fact quite positive. So TCS, the stock which has really provided a breakout from a descending triangular pattern, looks good. One can buy this targeting around 2375 to 2400. One can buy this with a stop loss of 2245. And Reliance Industries is my next buy recommendation. I think this can too help Nifty to climb higher. The reason of that is Reliance has been consolidating since a couple of weeks now, and in that process it has formed a nice symmetrical triangular pattern, of which it seems to have completed its last leg on the downside. The stock has reversed quite well from the lower end of the range. Now it seems likely to inching towards the upper end of the range, that is around 2175 to 2200 levels in the short term. So I think one can buy for these targets with a stop loss of 2060. And I also like to add that once Reliance takes off 2200 zone, then I think this entire consolidation will thereafter can be superimposed on the higher side, and we can see 2300 levels as well. So I think these two large caps will help Nifty to climb higher, and one can buy these two stocks.
Okay, just one more question on these consumption stocks, Jay. I mean, Tata Consumer is now at 600, less than I think 3 months back it was at about 250, 300. In fact, we should just pull up a chart of Tata Consumer. It's had a phenomenal run in the last 3 months. Just look at that. It was about 360 mid-June, and now it is almost at 600. Any thoughts here, and anything else in the consumption space you like, whether it is Titan or even something like a Jubilant Food?
Of course, Sonia, I would say that Tata Consumers, is continuously forming higher tops and higher bottom, and the momentum out there is absolutely positive. I would say one can still to be a bit overbought, so one can book profits at least for a short term, but then medium long-term players can continue to hold on to this stock. On the lower side, I see a good support around the levels of 530. So I think those levels are held. One can continue maintaining, their long positions out here in the medium to long-term point of view. But other stocks, as far as this sector is concerned, then yes, Jubilant Food. I would say that this stock seems to be forming nice upward sloping channel, and is holding well to its upward sloping trend line as well. So I think Jubilant Food is one more stock in the sector wherein one can keep an eye on, and one can add on to their portfolio as well.
Do you have a view on Bata? Because, just as we speak, the stock's moved almost, 10 odd rupees in the last 5 minutes, currently at the high point. Again, another unlocked play candidate.
Absolutely, Bata, I'm quite bullish at least from point of view. I think this stock can climb to the levels of at least say around 1450 to 1480 zone, because stock seems to have completed its short-term consolidation. It has formed a good rounding bottom as well on the daily charts, and post results we have seen this stock in fact correcting quite a lot, and I think most of the things have been now discounted in the price. The stock has started to form high tops, high bottom, and the momentum is absolutely positive as well. It has short-term resistance around the levels of 1380, which is this 200 DEMA. But I'm quite sure that the probability of these levels getting taken off is quite high, and thereafter stock will move towards 1450 to 1480.
Right, Jay. Thanks a lot for that. So that's about his view. Sonia, you were saying that Tata Consumer, it was 360 in June. In March, it was 213. So it's actually tripled from those levels. So it's a crazy move that we've seen on that stock. But in such conditions, where do the domestic markets stand amid the ongoing impact and the weakening dollar? To get a sense of this and the outlook on the Indian economy going forward, we spoke with Randy Watts, who's the Chief Investment Officer at O'Neill Global Advisors. Listen in.
The India market is actually one of the top 10 markets out of the 47